Good morning, everybody. Welcome to the Premarket Rundown for February 17th, 2023. Our daily segment where we go over all the news, notes, and especially the mindset necessary to be continuously profitable here across these crazy markets, these volatile markets. I'm your host, Adam Holland, stock options expert and expert market strategist. And as always, we're here to get 1% better. That's the goal. You don't have to, change the world. You don't have to cure cancer. If you have the cure, please let people know. But overall, we're not here to make any, kind of world shattering strides because that's very intimidating. And at the end of the day, if you got to wake up and do that every day, you probably wouldn't wake up. You'd be too anxious. You'd be too scared. But if you woke up and you said, all I have on my plate today is to get 1% better by the time I lay my head down to go to sleep than what I was when I woke up, you can do that, right? And we can all make actionable strides toward that. And what you find is that you get a compounding return on investment, right? Where you end up leaps and bounds ahead of where you were over time, just getting 1% better each and every day. So as long as you commit to that, being committed and being consistent is better than, kind of these radical changes that we all wait on to change our lives, right? Our lives change bit by bit. And being here, investing yourself 1%, that is one of those changes that will definitely pay off, that will compound. And I'm super happy to be here. So let me make sure I got everything set up here. I want to adjust. All right, there we go. A little bit better there, adjusting the camera. And let's see what news we got on the docket today. As always, whether you're watching live or watching via replay, make sure you drop those ones in the chat, signifying your intention to get 1% better. You want to move with intention always in this world, especially in markets, right? We were able to make some nice day trades yesterday. It wasn't by accident, right? Running up 120% profit on SPY 0 date calls, right? That's not by accident. Making money off Tesla wasn't by accident. You want to make sure that everything you do, every move that you make is with intention and that there's something behind it. Otherwise, the money that is in the market that does have intention will overtake your money that does not have intention. Money follows intention. So we got to make sure that we're intent on achieving a goal, intent on achieving something. And that way, our money follows that intention. But let's dive in to our top news that we got going on here. I know yesterday we started with the music, but then Vivian, who's on here, let me know like, hey, maybe you might need a license to use the music. So I didn't have a chance to look deeply into what you sent me, Vivian. I've got to check it out, but I was like, you know what? I'm not going to ruin a good thing. You guys can listen to your pump up songs before you get on here. And then if I have the ability to, I'll look at it over the weekend and see if I can still do so next week. But looking here in terms of our top news, I don't know if you guys have been seeing, but it's really crazy. Like all these trains being derailed. Lawsuits are piling up against freight operator Norfolk Southern, whose ticker is NSC, which has faced a public backlash and investor scrutiny over a series of train derailments. So one led to a chemical disaster in East Palestine, Ohio on February 3rd, while another said to be carrying hazardous materials overturned yesterday outside of Detroit, Michigan. NSC shares have gone off the tracks over the past 2 weeks, falling 10% to $230, though some, like Cohen analyst Jason Seidel, are looking at historical precedent, believing the unfortunate events may not have much of a long-term impact. Also, you have to look at the fact in which, is this something where it's like if somebody says, oh, the rates of slip and falls in malls have exponentially increased the past 2 weeks. But you also look and there's been a rainstorm the past 2 weeks. It's like the same thing with markets, right? We've been chopping around / falling, right? Bull flagging and such the past 2 weeks. So really the majority of the market has been chopping and falling. It hasn't just been NSC. Now, has this contributed to it? Probably, right? But it's also recognizing that, hey, this isn't solely what was driving this move, right? It's like the same thing with Google. Did Bard, causing that error and messing up, did Bard cause Google to drop? Yes, but was Google already going to drop along with the rest of the NASDAQ and tech, which was also weak? Yes, it just dropped more because of the news. So was the 10% drop all because of the derailments? You can't really say because it's not like if the rest of the market was running and this was down 10%, then yes. But since the rest of the market is selling as well, you can't have that correlation causation type thing. But I did see that like the people of East Palestine, Ohio were mad, and they actually had representatives of the rail company like left the town hall where they were supposed to be explaining themselves because they said they felt threatened, like they felt that their lives were threatened. Yeah, I mean, when you have a chemical disaster that occurs because you guys' trains can't stay on the tracks, I'd say, I'd be pretty peeved off as well, right? In terms of seeking alpha commentary, while I expect more weakness than the average analyst, I'm eagerly looking to buy NSC as soon as it drops to $210 again. Contributor Leo Nellison wrote in an eerily entitled article just a week before trouble struck for Norfolk Southern, ticker NSC. He explores a steep cost surge and high operating ratios in the company's latest earnings, but counters that pricing and improved operations have helped bolster record revenues for investors looking for other players in the freight railroad sector. Um, yeah, other tickers related to like freight and railroad are CSX Corp. Their ticker is C is in cat, S is in savvy, X is in Xavier. And then Union Pacific, ticker UNP. And then Canadian Pacific Railway, ticker CP, which is expected to close its acquisition of Kansas City Southern by the end of Q1. So if you weren't familiar, now you know a couple of different tickers that are involved with railroad travel. Facing a backlash over the chemical spill in East Palestine, Norfolk Southern CEO Alan Shaw just penned a letter to address concerns about the contamination of air, water, and soil. So this wasn't just like, oh, hey, there was some contamination here. It looks like, the three mediums on which that we operate were all affected. So, quote, crews are cleaning the site thoroughly together with local health officials. We've implemented a comprehensive testing program and established a $1 million community support fund as a down payment on our commitment to help rebuild. Worries remain in the community of about 4,800, especially following the release of carcinogen vinyl chloride and reports of headaches, rashes, and nausea, as well as dead fish in local waterways. So, yeah, very scary scene out there in East Palestine. Is there anything to do about it? Around 1,000 derailments occur in the U.S. each year caused by collisions, conductor errors, mechanical failures, broken rails, and defective wheels. So this isn't super uncommon, I guess. Maybe it's just that, maybe it's a slow news week and this is just what we're hearing about. While it may be hard to prevent the incidents, the latest was said to be triggered by a mechanical axle issue. There have been pushes to regulate and deregulate new costly safety standards in recent U.S. administrations. Others have blamed the mishaps on precision-focused railroading, heavier train capacity, staff cuts, and the rushing of essential safety checks. So overall, we're seeing, kind of some issues right now in the railroad sector that they need to address. But at the same time, it's one of those things where there are issues that happen each and every year. It's just very unfortunate that at this point, it happened to be carrying some cargo that were that was damaging to lives, which is very scary. So prayers out to the people in East Palestine, Ohio, that are dealing with that. Let's go ahead and dive into what we got going on next. In terms of tech, we're sitting here on YouTube. We got some big YouTube news yesterday, actually. One of the most prominent women in tech, YouTube, which is owned by Google. YouTube CEO Susan, just gonna say Wojcicki. I'm just going to leave it at that. YouTube CEO Susan Wojcicki is stepping down from her position to focus on family, health, and personal projects. Wojcicki was one of Google's earliest employees, having rented out her garage to co-founders Larry Page and Sergey Brin in 1998. Yeah, so she's definitely an OG at Google, and later shepherding YouTube to a premier position in online video. Her departure comes at a time when YouTube's under pressure from falling advertising revenue, as well as intense competition from TikTok, Facebook Reels, and streamers like Netflix. Wojcicki will be replaced by her longtime lieutenant Neil Mohan, a senior ad and product executive who joined Google in 2008. Now, in terms of stocks news here, worries return. Market volatility is making a comeback as traders eye any mention of the word inflation like a deer in headlights. Stocks fell on Thursday following the release of January's producer price index, with wholesale calls coming in hotter than expected. Again, that number was expected to come in hotter than expected because CPI data came in hotter than expected. We got CPI data earlier this week, and that was hotter than expected, right? Meaning that inflation was higher than what we were expecting. Typically, CPI and PPI are lockstep, right? Hand in hand. We saw some decoupling of that where one being higher didn't equate to the other being higher at the end of last year, but typically that's how it goes. It was the exact same thing this week. So I'm kind of hesitant to say that that was the thing. That took us there. There were a number of things that happened yesterday. President Biden spoke. The market does not like it all when he speaks. And also, we had a number of members of the Fed speak, especially around the afternoon area. So we had Buller speak. We had Mester speak. We had the jobless data. So it was like kind of like a compilation of things. But we did, open red. Then we closed that gap to the upside, which paid well, right? 120% on spot calls yesterday. Paid nicely on some Tesla intraday, like 45% on Tesla calls intraday. So it's nice, great money to be made in the beginning of the day. So I didn't have to worry about the end of the day, but there was great money at the end of the day too. Very nice, clean double top, that played out, which I wish I was around for, because it was a beautiful rejection. But unfortunately, I was taking care of some other work. It's fine as long as you're making something over zero. That's a plus, and you recognize, okay, if this happens again, right, this is where I need to be at. This is how I would execute. But you can't ever be in everything, so you don't even get mad over it anymore. You're just happy that you got what you did. You bring it home. You hit your goals. You keep it pushing. But in terms of inflation is kind of the easy go-to scapegoat. Whenever the market turns red, people are like, oh, people were mad about inflation again. Like, so what about 2 days ago when it was green, right? Or yesterday or whatever, right? Not speaking about yesterday, but in general, it's like on the green days, do people forget about inflation? And then on the red days, people remember about it? Like, you can't just every single time, even when we don't have data, they're like, oh, people are back to worrying about inflation. That must be why we're red. Like, no, it's likely a reason that is indicated by the charts that we're red, like the fact that we've been downtrending on the daily for the past 2 weeks, right? That is more of an indication of why we're red, because that's the trend that big money has us on, as opposed to, oh, like we're just scared about this thing that has been here for the past year and a half, right? And has literally been a part of everyday life, the green days and the red days. Let's see here. So they actually do mention that inflation wasn't the only thing causing jitters. In terms of quotes, my overall judgment is it will be a long battle against inflation. St. Louis Fed President James Bullard told reporters. So that is probably what also did it. I could see that as being, because he was supposed to speak. We talked about that on the pre-market rundown also yesterday, right? And we saw some volatility, kind of in the afternoon, which is when he was supposed to speak. But he said basically we're going to have a long battle against inflation, and I know markets didn't like that. Bullard is somebody that does move markets. Traditionally it's just Powell, but if there's anyone else, Bullard. Bullard is overall is really hawkish, meaning he's like really tough, when it comes to inflation. And then we also had Cleveland Fed's President Loretta Mester say that she saw a compelling case for a 50 basis point increase at the central bank's meeting 2 weeks ago. So I know the market was falling out over that. She's calling for 50 basis point hikes, right? They're trying to hear no hikes. We got a 25 basis point one. She's like, I wanted 50. So, you have people just completely up in arms at this point, hearing that. Elsewhere, initial jobless claims continue to point to a tight labor market, further evidence that higher interest rates have yet to significantly dent the economy. And that, again, is a bad thing. Typically, you want to see jobless numbers that are better than expected. You want to see less people jobless, because that's good, right? No, not in this case for markets, because when the Fed is hiking interest rates, the Fed's got two jobs: to maintain a strong labor market, right? And then to keep interest rates low. If the labor market is strong, they can keep focusing on interest rates and they don't have to worry about how much they're hiking them, right? But then if you have weakness in the labor market, then the Fed has to say, okay, maybe we stop hiking as often. So, the fact that the labor market is still, not showing a bunch of people or more people than expected being jobless and being unemployed, that's a bad thing for markets. Right now, what's driving the markets positively is losing jobs, right? Companies cutting jobs, the amount of jobless numbers increasing. That is what is bullish for the economy. So continue to remember that the economy or the market, that's what's bullish for the market. So the market and like the overall welfare of the American person is not coupled together, right? What drives the market sometimes can be bad for the average person, right? Because it's better for these companies. And that's what you've got to recognize, right? Not everything that's good for markets is good for you unless you are directly in markets making money off of that move. Otherwise, it's likely not good for you. In terms of moving to our next headline here, consumer debt. The sum of money owed by U.S. households climbed considerably during the fourth quarter, rising by $394 billion to $16.9 trillion. That's the largest quarter-over-quarter increase in household debt in 2 decades, taking balances 2.75 trillion higher than before the pandemic at the end of 2019, according to the New York Fed's household debt and credit report. Not helping the situation was the U.S. central bank's rate hiking cycle, which has raised the borrowing costs on everything from credit cards to mortgages and auto loans. Just dropped, a reel on auto loans. Dropped it here on YouTube Shorts as well. That was the first one that I threw up on here. But if you haven't checked that, check that reel out over on Instagram, right? Show some love, leave some comments. But that is a very important obstacle that the American, public is facing right now in terms of cars and auto loans. Serious delinquency rates of 90 days or more are creeping up too. And while the metric is not near dangerous levels yet, it will be an item to watch as the year progresses. This is what I was talking about in January, right? The delinquency rate creeping up, right? People having record levels of debt. I mean, at this point, we've got the highest debt we've seen, $16.9 trillion of debt that American consumers have. Like, that's a lot, trillion with a T. Our brain can't even comprehend that many zeros, right? So at some point, the rubber meets the road. At some point, if prices don't go down, and they're not looking to go down anytime soon, if the rate of which it takes to borrow, right, the Fed's going to keep interest rates up all this year. This isn't going to be helped in any way. So at some point, you reach a breaking point. That's why it's super important to be aware of how you need to move, whether in a bull market or in a bear market, because we can get yanked right back down in the bear market, just like we got yanked right back down in the daily downtrend on SPY, right? The S&P yesterday. We broke out 2 days ago. We got yanked right back down beneath it yesterday. That can happen just because we broke the weekly downtrend on SPY and things are looking, bullish longer term does not mean that they can't turn around, especially when you have something like this that's creeping up behind you. This isn't like a casual, we got like a little pimple we need to pop. This is like, you have like a serious endemic issue going on in your body that you need to get checked out, or else, right? That's where we are in terms of kind of consumer debt and us having the largest quarter over quarter increase in decades, right? In 20 years, this is the largest quarter over quarter increase in 20 years. So definitely something that you need to be factoring in terms of like laying out the landscape for this year. This allows you to see the fact that there might be a trap laying there in the middle of this year, right? That you've got to be aware of. Otherwise, you're like, oh, everything's good, life is good. And then suddenly you get, slapped out of nowhere when really you saw the slap loading up. You see the slap loading up, you got to get ready to dodge, right? Otherwise, it's on you that you got slapped. Because if I walk up to you and I'm like this, and you're like, what are you doing? And I'm like this, and then eventually you're like, okay, I don't know what you're doing, but I'm moving. If I swing the slap and you're still standing there and I've walked up to you and I've been standing there like this, at that point it's on you. Like, you know what I'm gearing up to do. I'm gearing up, right? I'm gearing up to deliver a mean thunderclap. So if you don't want to get thunderclapped, you got to move out of the way. It's the same thing when it comes to markets. When you see the writing on the wall and you're here, actively breaking down what's happening around you, then you're able to make moves, right? And the important thing is to make those moves, not just that you're able to, but also executing. Now, in terms of today's markets, red across the board here after we had that selling end of day yesterday. In Asia, Japan down 0.7%, Hong Kong down 1.3%, China down 0.8%, India down 0.5%. The FTSE in London down 0.2%, Paris down 0.6%, Frankfurt down 0.7%, the Dow down a half a point, S&P down 0.7%, NASDAQ down 0.9%, almost a full point. Crude oil down 2.3%, gold down 1%, Bitcoin down 3.7% to 23,754 per coin. Today's economic calendar, we have a member of the Fed who's speaking now, 2 members, but they're not really kind of the market moving type. And other than that, not really any important things on the economic calendar. So we'll move here to our rapid fire bullet point rundown. What else is happening? Another tech cut. DocuSign to lay off 10% of its workforce. Europe said to run into delays over how to regulate AI. Will China shoot down Ford's CATL EV battery deal? Not likely, so that's good for Ford. General Motors, ticker GM, is now Lithium America's largest investor. We talked about lithium during the last challenge. You've got, everybody needs a little piece of lithium, and General Motors is now the largest investor in Lithium America. I think that's definitely a strategic move. Their ticker is LAC for Lithium America. So interesting development, smart move by GM. You got to make sure you have that lithium in order to develop the batteries that you need to fuel these EVs of the future. Tesla recalls 360,000 vehicles to fix self-driving problems. That definitely caused Tesla some issues yesterday. Fortunately, it was after we had made our money on Tesla, so that's nice. But yeah, it definitely caused some issues with Tesla. DoorDash, ticker Dash, tops revenue expectations, posts upbeat guidance. Strong growth sees DraftKings guide for profitability in 2024. That was something that we talked about here all week, right? Expecting DraftKings to beat earnings. Whether or not the move was large enough, in order to make money on those contracts, we've got to see. But I was completely fine with gambling on that with DraftKings. With how much they expanded and sports gambling expanded over the course of the end of the year, with it being legalized in tons of states and millions of people adopting it, it was record profitability across the board in that sector. So that was kind of something where it was like, even though earnings is 50-50 and a shot in the dark, that one I felt like was a layup. But again, you're not putting your life savings into it because you don't know if it moves big enough, for you to make a profit off of it, because a lot of that volatility is already baked into the price. So if you don't get a large enough move, you end up SOL, right? For lack of better terms. In terms of Goldman Sachs, they pause efforts to acquire new credit card programs. Multi-billion-dollar crypto scheme. SEC sues Terraform Labs in Do Kwon. That's over the Terra Luna crash situation that happened a number of months ago. And then Manchester United on the move as Qatari's ready bid of $5 billion. So Manchester United, ticker MANU. For Man U, they're a soccer team. For those of you guys who don't know much about soccer like me, but apparently the Qataris are buying up, soccer. I'm pretty sure that they got Cristiano Ronaldo there, and looks like they're trying to buy Manchester United. So Man U, which is publicly traded, is on the move. Whenever something's being bought or acquired, it goes on the move. So that's something to take a look at this morning as well. But that'll wrap us up here for February 17th. 2023, the pre-market rundown for today. We're looking to finish strong, right? Finish strong this week. Make sure that you're not forcing anything, that you're operating in patience, PAYTIENCE, and executing when necessary, right? That is the name of the game. In terms of what we have going on next week, I'll have to see what my schedule is looking like. Might still pop in here to do these pre-market rundowns. I might be completely locked in on the challenge. If you aren't, and you want life-changing information that will allow you to augment and upscale the amount of money you're making in the market each and every day, if that's zero, then it's very easy to do that, right? But you need to be in the room for next week for the Market Blueprint Challenge. You got to be there. If you're not registered at bearmarketblueprint.com, that's all I got to say. If you want to see, what's in it, I've gone over it, but you're getting a flowcharted blueprint literally of how to trade. It's telling you how the market works in a bear market and in a bull market, right? You're going to learn some day trading tips. You're going to learn a lot of things about reading charts that you didn't know beforehand. It's really going to augment your ability to day trade, your ability to swing trade. We're going to talk about some new capabilities of our price roadmap tool. So please, please, please get in there. I cannot stress enough that for $200, this is literally the bargain of the century. It's like walking outside and somebody's like, "Oh yeah, I've got this Ferrari for 10K." Right? Or I've got this PS5 for $100. It's like, bro, that is suspiciously low price for the value that you're getting. That's what the trained eye will look at this challenge and say. They'll be like, wow, 3-day online live masterclass is recorded. You're giving away this much freaking value. It's for $197. You must be out of your mind. Maybe I am, but you should probably take advantage of that deal before I get back in my mind and recognize that stuff should be thousands of dollars where it's priced and not where it is. So if you're ready for timely information, you'll get that. But you got to make sure that you're in that room, that you're executing, and that you're ready to go. So ready to change some lives next week, ready to absolutely take things to the next level. I'm excited for what we got going on today. Everybody, make sure you have a great rest of the day. If you got any value from this, just show love, right? On Instagram, throw some comments. We got content coming out all day long, right? Here on the post, throw some comments. That helps me, and that can help me continue to help you. So have a great rest of the day, everybody, right? Show some love, because love is all we got. And I'll see you guys. The market's closed on Monday, so we won't be here. But on Tuesday, see you back here for our next pre-market rundown. Have a good one.